In this video, let's talk a little bit about the E-mini S&P, and we're going to talk about this from a Heisenberg standpoint. Now, this is what happened today in the markets. I just want to review this market and show you some of the trade setups and how this market played through. Now, the first thing that happened this morning, we all know Donald Trump sent out a tweet, and of course, that drove the market higher. What did his tweet say? It said that things are going well with the Chinese talks and that there may be an agreement here coming soon, and that he was looking forward to that. And that's really all he said, and that's what caused the market to rally the way it did today. So the first thing we want to do is just look right off the bat, first thing in the morning, this market came in with a blue light system crossover right here at the Bulls and Bears launch, kind of at the launch pad, 7:30 in the morning, right as the market opened. So you can see we got a signal right there, an intercept order from the Bulls and Bears blue light, the arrow, and the market took off like a shot. That first move, if we just draw a dollar calculator in here from entry to exit on the E-mini S&P, was an $837 move. Now, that's one contract, and that's on the regular E-mini S&P. Now, if we were on the micro, that would have been $83.75, $83 per contract. So depending on your risk tolerance would depend and determine which one of these markets you'd be trading. And of course, if you were down on the micro, you could have traded, more than quantity one. You could have traded quantity 2, 3, 4, and you can do the math on what that would have been. Now, of course, this number doesn't represent commissions and fees. Now, if we come in here and the next wave, we come in off of this thing, we have the counter trend coming back in, and then the re-entry to this market and following the blue lights back up once again. If we draw another dollar calculator in there just from the entry, the pullback in here was a little bit against our initial entry, but it never did hit the blue lights for the exit. So we're going to go from the entry of the blue lights back to the exit of the blue lights. That would have been a $550 move. Again, does not represent commissions and fees, but that's our first two drives of the Elliott Wave pattern. If we come in here with our 1, 2, 3 tool, we just draw this in here, A, B, C, and we draw that right in there. There's the low point. You can see this market came right up, busted through the 76.4, and just like I always say, markets don't like to do 100% of everything, but it came up, hit about the 90%, and started to draw back, and that's where we broke the blue lights for the exit. Now, on the overall longer-term trend, it did come up and hit the 100% projection off of that, but that would be the third drive high. So if we're doing an Elliott Wave count, this last drive to the top was really ugly. The market started to flatten out up in here, but nonetheless, you can see we got our counter trend in here for the third drive right in there. And then this next rally would be the Elliott Wave top formation. And it's a little ugly up in there. And that's not uncommon. That third drive is oftentimes not very strong because the market's starting to lose strength as it starts to retrace and come back down the other side. But this is pretty classic, almost straight out of the manual, as this market came up and made this perfect Elliott Wave. As we come in here, we'll just grab our Elliott Wave tool, and we'll just manually draw this in here. So this is X, this is 1, 2, and then this would be 3. Come down here, this is 4, up to the peak is 5. And then this is the other side. As this market came down, it followed, again, the rules, just like a train on rails, came down, made the ABC pattern on the way down. And so that's kind of a nice little perfect Elliott Wave happened this morning. Whether you caught that first run or the second run or the couple of the ABCs on the way back down, you can see that this was a perfect pattern coming in here off the ABC pattern on the retracement. And if we take the Fibonacci ruler and draw that in from the low point all the way to the high, you would see that it retraced back half or 50% of the last major move. Again, just like a train on rails. So I just wanted to bring that to your attention. I wanted to draw that out for you, that you see. If you've not seen the Heisenberg strategy, swing by commoditytradingschool.com, sign up, and you'll get access to the Heisenberg strategy for free. And that's what this is all about. Trading here on the range bar 6 on the E-mini S&P today after Donald Trump's tweet.